This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe Rabil with Invest Like a Pro. I'm going to talk about multiple time frames today, and I want to talk about the upper time frame. Typically, when I do videos and if you go through my book Invest Like a Pro, I usually just talk about two time frames back to back, the high time frame and the lower time frame. And what I want to do is make sure you understand that the upper time frame can play a role as well. Now, you can play the game on the high time frame and the low time frame by themselves, and I think you'll do well. But I also think if you keep an eye out on that upper time frame, it's going to help you to identify, probably when you're in a lesser probability play. And so again, this is a game of probabilities. We're always trying to go and identify the best ideas that we can find, and any screen or filter that you can do and add to your rules of your trading plan that'll prevent you from getting into something that maybe isn't as high a probability, I think is a good idea. So I want to talk about this upper time frame. I've had a few questions, and I am working with some people. I do one-on-one coaching, just so you know. There's a link in the bottom if you want to email me. But the thing is that this is something that comes up and has come up multiple times as I've worked with individuals. And so I wanted to make sure I covered this. So let's get into the first slide here. And I wanted to make sure that I just gave a quick picture of what I'm looking at on this upper time frame. So this will make sense. I'm going to go through some individual stocks that'll give I think it gives a real good examples, but I wanted to make sure I just give you a real simple look here. And this green line would be the ATMA. And in both of these are two different pictures. So the first picture is upper time frame. So let's keep this simple, and let's say that you're looking for a two time frame play on a weekly and a daily. This would be your monthly time frame. So you're going up one more time frame. And what this is doing is it's helping you to identify your upside potential. And it's also helping you to identify whether it's a good idea to do this trade on the weekly and the daily. And so if we look at this on the left side here, you can see that if a stock is moving up, and let's say it starts to pull back, it hits the 18-month and then it starts to pull back and form the weekly daily setup, this is not a good trade. I mean, I do not want to be fighting this 18-month moving average. I would say like 80 to 90% of the time, I would just pass on this. Every now and again, if we're coming off of a climatic low and it looks like it's getting ready to work through this 18-month moving average, or there's divergence in place on the monthly chart and the weekly chart, and it really just looks like it's getting ready to reverse the trend, then I might be interested in doing this. But I would say the majority of the time, you don't want to fight a declining 18-month moving average. So if you have a trade on a weekly and a daily that looks attractive, but you're fighting the 18-month moving average, I would just pass. And then the second thing that I would keep an eye on is if you've made a big run on the monthly chart. And one thing I wanted to make sure I pointed out, so this would be 1 month up, 2 month up, 3 month up, and they're going at about the same rate. But notice what happened in the fourth month. Look at the size of this bar. And when you make a run away from the 18-month moving average, you get away from it, and then you have a big bar like this. This is usually a sign of sort of climatic activity. And so I would not be interested in playing a pullback, a weekly daily trade from this vantage point, because I think there's a lot of potential pullback risk on this higher time frame, or I should say this upper time frame. So we just want to be aware of that. Just keep an eye out for the upper time frame and make sure you know where you are. Any of these 1, 2, 3 bars, even this fourth bar, if it was an enormous bar like this, I'd probably still be interested, because I am looking for stocks that are trending on the upper time frame. If they're trending in the favor of the trade, then I would view that as a positive. And most of the time, if you make a run of like 3 months, if you're going to get a pullback on the weekly chart, it's going to kind of work off this little overbought condition that has formed. You don't want to be too picky about this. I'm just looking for a climax move. If you have a climax move away from the 18-month, or if you're running right into the 18-month moving average, those are the two keys I think you want to be on the lookout for on your upper time frame. So let's go to the first example. And I wanted to make sure I brought this up. This was actually a stock that I had recommended down here on the daily five, one of your daily fives on Stock Charts TV. And, it's had a really good run. But notice how this is breaking out of a big base here. So this is not either one of those two pictures that I was showing. Sorry about that. Here, it's neither one of these two pictures in my view, because you're not running away from the 18-month after an extended run. In this case, you're breaking out of a massive base. And I would be definitely looking for a pullback on the weekly chart and looking for my opposing trend trigger on the daily pattern and see if that can develop out of this breakout move. So very, very attractive. If we go to the next example, this is Checkpoint Software. If you notice, this is just breaking out right now. And so again, this is another great example where I don't think even though you've had a huge monthly bar, you can see the size of this monthly bar, it's really just breaking out of this base. And I would definitely be on the lookout for some kind of a pullback and an opposing trend trigger on the daily. Let's go to the next example. So now we're getting into match group. And if you notice, you had a nice pullback on the monthly, and then you made a huge run. And now we've gotten really far away. And last month was a big bar. So I would be less inclined, looking at the monthly, I would be less inclined to take the next pullback on the weekly now. There's another key criteria that I think you want to be using when you use the monthly and the weekly together. So we had this pullback to the 18-month line, and then we broke out. What you want to do, and I have said this in numerous videos if you go back, I'm always looking for the first two pullbacks. It's really the first two bull flags in this scenario. So you break out from this move, and then you get a bull flag here, and that's your first weekly daily setup. And it was a very brief signal right here on the daily. I mean, you didn't really have much time, but I would still classify that. It was a zero line reversal. It's still classified as an opposing trend trigger here. And then if you look at the second one, this pullback, this was a high quality setup. It had the 18 cross down below the 40. It went in the zone, and then it came out, and all it did was test the low. When it turned back up, it was ready to go. So this is really what we're trying to identify, but this is also a signal here as well. So once I get two signals, I'm less inclined to be looking for the third. The third signal, a lot of times you'll get two bull flags, and then you'll go through a more complex pullback or correction on the next one. So my bet is, based on what's happening on the monthly chart, and then we look at the weekly already given two signals, I'm actually looking for an opposing trend trigger to develop on the weekly chart now. So that's sort of the pattern that I'm looking for. I go for the first two bull flags, the first two pullbacks out of a breakout. And then after that, I can see that on the monthly, it's gotten extended, and we probably need to go through a more extensive correction pattern on the weekly. I want to give you a couple more examples real quick. So here is Boeing. And I mentioned this in a couple videos, actually, the low ADX breakout pattern on the daily, which triggered here, and you actually had a nice little higher bottom that formed that you could have bought here. And when I look at this pattern and the way it developed, what you want to do, so that was right here on the weekly. Right there is your signal. So that's a weekly. The weekly is saying, you know what, I'm coming up through some support that had developed. I had a low ADX pattern on the daily. What my target for this pattern is actually the monthly 18. You see how when this triggered here, the 18-month was way up around 245, 250. And that is the target that I use for this trade. So if I'm playing a counter trend to the monthly, and I get a signal, a nice signal on the daily, which this was, I know that my target is up to the 18-month moving average. This came basically right to that line and then reverse. So you want to know that that is how you use the upper time frame as sort of a target area. Now I'm getting a pullback developing on the weekly chart. If you notice, I'm getting this is sort of developing. Now let's say this develops in an opposing trend pattern where the 18 comes down below the 40 on the daily chart. If that happens, I'm really not interested here. And the reason is I'm running right into the declining 18-month. I've sort of fulfilled my target area. There's just not a lot of room. So, if there were more room and we hadn't reached the 18-month moving average and I got my opposing trend, then I could play for a weekly daily with a target, again, up to the 18-month. But in this case, we already reached it. Let's just look at one more example. This is DAL. So now DAL has made a big move. I'm starting to get a pullback on the weekly chart. I'm starting to see maybe the potential for an opposing trend pattern to develop on the daily chart. Again, because this ran all the way up to the 18-month moving average, I'm just not interested here. Even though maybe there's signs of improving momentum and everything, I would just rather go and not fight all this resistance. I mean, if you notice, look at all the price resistance up here in the mid 40s. And then you have this declining 18, you have a declining 40. I mean, I don't really want to fight this when I'm buying off the weekly and the daily. So, again, the goal is to identify this 2 time frame pattern. And you can do this. So I'm just saying, if you do this type of pattern where you're fighting the 18-month, your upside is probably not going to be as good. The potential for failure in your pattern is increased. And so make sure you're not fighting this upper time frame. So that's kind of the goal here. Again, if you like this type of material, give me a little help with the YouTube algorithm and hit that like button. And we'll see you next time. Thank you.